Hello, everyone, and welcome to the Quant Financial Engineering Podcast. I have a treat today. I have a portfolio manager, Alexis Brown Roberts from Alexis Investment. That's going to help us figure out what's going on in this market and from the perspective of the investors. So, Alexis, welcome.
Hi, thank you so much for having me on.
So, first question. Market is down this week, kind of. Up. It was up Monday, down Tuesday, down Wednesday, down Thursday. And it would appear having to do with, I guess, tech stocks. So what are you seeing? What's going on according to you? What's the vibes in the
Yeah,
market?
this year was really posed to be a volatile year, and it certainly has lived up to that so far. We have a lot going on right now. Obviously, stocks are pretty richly valued. That's a big part of things. And so it just means really that when there are pullbacks, investors are going to pull back a little further. There's obviously a lot going on geopolitically, tariffs, just a lot of news all the time, but there's still a lot of positives going on as well. So you're kind of seeing that back and forth. Um, and so in general, you're just kind of seeing more reactions to things. 2025 was an amazing year. January was great, albeit volatile. And that's kind of what we're expecting for this year. So I think a lot of what you're seeing this week is profit taking and just rotation, especially coming from you're seeing these sell-offs from technology, which has been a really big winner, and potentially a broadening out of leadership. Even ending last year, you saw some foreign outperforming. But a lot of what you're seeing this week as well is just a Bitcoin rotation, kind of getting sold off as well.
Emerging markets. What are you seeing going on over there?
We like emerging markets. We added some exposure, really, again, with that broadening out of leadership. It's interesting to note that foreign in general, for the last quarter of 2025, as good as US markets did, outperformed US markets. And that continued through January of this year. Um, and so I really think that a lot of that story is having to do with the fact that there are just a lot more attractive valuations abroad than there are in the US right now, just with how richly valued everything is right now in the US. And so I think it's going to be an interesting spot. And it tends to be, although it wasn't this way for a decade, but that there tends to be a change in leadership between foreign and domestic. And that tends to last quite a while as well. So that's an exciting area that we've been adding to lately. And we've chosen to play it through ETFs.
I like the word that you're using, rotation, because I mean, for the longest time, emerging markets have been in the doldrum, but you're right, it's starting to. So there is a rotation into emerging markets. What about a rotation in small caps? Because they haven't done anything for a while either.
Yeah, they haven't done anything in a while, and that's still not an area that we've chosen to go into yet. We've gone a little bit into mid caps, but I just don't think that with the environment that we're in right now, small caps and particularly the presence of unprofitable companies within small caps is necessarily a place you want to go.
Okay. Well, we you mentioned geopolitics, rare earth. I mean, my understanding is the U.S. over the next 3 years is looking to catch up. Is there anything in that environment that pique your fan? I mean, they are not all of them are making money, obviously, but I mean, the government took position in some of the largest, I think, largest without naming names, but some of the largest names in that field. Anything exciting as far as from your point of view?
Yeah, I mean, it's definitely been a hot button topic that you've been hearing about a lot every time you flip on a politician's news, pretty much. We aren't necessarily going into rare earths in particular. I do think you get some of that exposure from emerging markets in particular, as those tend to be the areas where you'll get rare earths. We do have a position in Freeport McMoran, so that is a metal. It's a Dr. Copper. But in terms of like specific rare earths, I think it's better off going through a more broader spectrum from there and going more through that emerging markets or other places than trying to cherry pick an emerging market stock, a rare earth stock.
Yeah, so I guess we could say something about gold and silver then, right? So instead of being like a going for a miner, you could can you get that out of some emerging names as well, emerging market names?
Well, gold miners and metal miners in general tend to be much more volatile than owning the metal in particular. Gold was actually one of our largest holdings for a while, and we just recently sold it earlier this month, well, really last month, just because after the really strong performance that it had, it, it just was going parabolic. And so once you've seen a move like that, it tends to be that there's not much more room to run up from there, and gold will tend to revert back to the means. Gold itself is a really good hedge against geopolitical risk, inflation risk. There's obviously a lot of movement around the world from central banks, and so it helps with that. So it definitely has a place in portfolios, but it doesn't tend to be a very good long-term hold position. And so after this amazing run up that it's had, it seemed like it was time to sell it to us, and we did sell it. And we would be hesitant to jump back in now, even with the pullback that we've seen it have this week.
Okay, so you mentioned gold, so I have to ask, and you guys were smart enough to get out in time. Uh, so what's happening here? Is parabolic? You use the word, so I guess it went too fast, too quick, and I guess what institutions decided to pare down because it went up so fast so quickly, and then the retail investor got caught, and they
Yeah,
also panicked.
yeah, if you look at a chart, it really does look parabolic. And it went a move that just went straight up. And historically speaking, you actually have to go pretty far back in gold's history to find another move that parallels that. But it doesn't tend to be sustainable. It tends to come back down first. And so there are large windows of time where gold is a great investment. And then there's large windows of time where it really isn't. And so, more than likely, it was people realizing that they've gotten so overweight in the commodity and just doing their rebalance, especially as most people tend to rebalance end of month, end of year.
Okay, silver. JP Morgan, I don't know if you're familiar with the story, the JP Morgan unwind, which was public, well, not unwind, they basically sold their position, they're short. They, they, they basically got into possession of 3 million ounces of silver on the day when silver actually sold off. So now JP Morgan is long silver in a big way. But there was also the news having to do with the margin requirement that would increase on the same day. Do any views as to what happened on that day? I mean, all these things happen on the same day, and then silver now, kind of like gold, went up. I mean, went down a lot, and now it's going back up.
Yeah, silver did get beat up a lot this week,
Yeah.
as alongside gold. I can't say that I was looking too closely to the particular things that happened with JP Morgan
Mm-hmm.
that day. Just we haven't chosen to play silver. Um, but silver tends to be a lot more volatile than gold, although it
Mm-hmm.
tends to track similarly to gold. And that's kind of what you saw this past week, right? You saw gold falling off, but you saw silver falling off even further. And so, because of that, kind of similar to gold miners, is a lot more volatile than gold. So, we would tend to choose to play the gold over the gold miners. We tend to choose the less volatile of the gold and silver as well. So, because of that, I don't have as much to add about silver as I do with gold.
But okay, so in terms of gold and silver, are you looking at it as a inflation hedge? I mean, I know you're not into it anymore, but is it an inflation hedge or is it an inflation for systemic risk, which we might also be in, quite frankly?
So we really looked at it as opportunistic diversification, is how we called it, because it really moves entirely differently than stocks and than bonds. And since bonds were yielding really unattractively, and we were looking for a way to combat the inflation risk, geopolitical risk, monetary policy risk around the world, gold is a really good way to do that. And that's where it does have its role in portfolios and the story that it really holds there. Um, but within the margin requirements, the tighter margin requirements is certainly going to have an impact because it is going to make it so that especially right now, a lot of people are very leveraged. There's very high margin just persistent in the markets alongside the high money market and cash on the sidelines. And so because of that, any type of changes to margin requirements is going to affect a lot of trading for that day.
Well, and I guess you're right. And this is going to make it tougher to actually get into to leverage yourself with the margin. So, but maybe that's why they did it, right? They raised, and I think they did that in the past also a couple of times because they saw that it was just ridiculous in terms of the volatility, and everyone is leveraged to trying to hop up the even higher and higher returns on gold that they say, you know what, let's calm this house down and raise. I think they raised it like 15%. And so if you're a small investor, that's going to be tough for you unless you're a big capitalized bank or a house. It's going to be a lot easier for you to do it. So I guess, yes. So they probably,
Yeah, well, you'll have to sell
yeah,
if you're raising your margin requirements. That's and if you have to sell, then that's going to push the price down, and then that may make people panic and sell more. And I think
that's
that's
what
really what
happened,
you
right?
saw.
That's what
Yeah.
happened with silver. They probably, the little guy said, oh my God, 15%, I can't. So, and of course, the big guys took everything in. But the point is, maybe that's the idea. What CME was trying to do is basically calm everybody down. Let's get rid of the small investor that's going to create even more volatility, make it more difficult, I guess, for them to
Well,
get.
and it raises an even funnier question about the fact that margin requirements are set, right? As well as Federal Reserve sets interest rates. It sets what banks have to hold at them, and it's a consortium of banks. So I think you're finding a lot of that with different people able to set margin requirements, different people able to set other things, and those big guys able to benefit from it. So I think, though, it really points to just excessive speculation with the fact that there is so many people on margin right now. You wouldn't have such a waterfall effect if there wasn't already so much excess speculation. I think most people at this point, if they were going to be wary of what's going on, if they're going to be outside and on the sidelines, they probably already did that. They're probably part of that $7 trillion that you hear about sitting on the sidelines. But if they're not, then they're probably those people who are on margin trying to keep on buying. And that's where we're getting this richly evaluated stock market.
You mentioned another interesting topic. You mentioned the Federal Reserve. So what are your views? What is your firm views on Kevin Walsh and going from being a hawk to a dove?
I think Kevin Warsh is going to be a very interesting if he does get through confirmation, which obviously some people have been saying they're going to go against. But I think he's going to be really interesting because he was on the Federal Reserve during the great financial crisis. But at the same time, since then, he's been very vocal about the fact that he doesn't want to have that over manipulation within financial markets outside of those very extreme cases. So I think it'll be interesting to see. You do make a good point with saying that historically he's been more watchful on inflation, which is very different than what the president had been saying he was looking for. So I think it's going to be interesting to see those dynamics. And I think almost more importantly is just the fact that we're getting a new Fed chair. You saw markets on the day that he was announced uh, react positively, probably just because markets like certainty. But it does tend to be that when we get a new Fed chair, that Fed chair gets tested. And so that coupled with it being the second year in election cycle, which tends to be a bit more difficult, um, could just point to interesting seasonal patterns, plus midterm elections as well.
So What is it that we need to worry about then in this market?
That's an interesting question because there's always lots of things to be worried about and lots of things to be excited about. I think that right now, the main thing to really be watchful of, and that we're really watchful of, would be those rich valuations within markets. Um, but I think it tends to be that what really moves markets are the things that we don't expect coming. Um, and so I think that for this year, especially with the parallels that we continue to see between AI and hopefully getting a transition from that being mostly AI CapEx spend to being something that really boosts productivity across the greater market. So hopefully, again, supporting that broadening of leadership, potentially leadership rotation, because really that boost in productivity would be what could continue to allow this market to flourish. Um, and I think that we saw last year as being a parallel to 98, which could spell this year for being positive but volatile and probably not quite as positive as we've seen prior years. And we wouldn't be surprised, given the excess speculation, given the rich valuations, that any type of pullback may be a deeper pullback than we're used to.
I like what you say. Yes, I would agree as well that there's lots of rotation, even rotation of senior people, such as the Fed. There's rotation within different asset class, rates, inflation. Are you guys worried about inflation at all?
You're always worried about inflation, but I don't think that's necessarily the biggest story here. I think that you brought up an interesting point when you said rotation of asset classes and asset allocation. I think the fact that we are so richly valued really spells that over the next decade, timing the market is going to be more important than time in the market. And so, really, over the next 10 to 15 years, being able and being willing to have the flexibility to vary your asset allocation is going to be much more impactful for your portfolios than it has been certainly in recent years. And I think that's where tactical investments like what we do within our fund is really going to be beneficial compared to just what we've been used to being able to do for the past decade, really.
You mentioned your funds. Tell us quickly what is it that you guys actually do?
Yeah, so I'm part of a father-daughter team. We have the Alexis Investment Partners. That's more of our RIA side, where we work with individuals and small businesses and do financial planning as well. And then we also run a tactical fund that's listed on the NASDAQ. And that means that we vary our asset allocation substantially across time. And so what we're seeking to do really is to add value over full market cycles by participating more in the moves up than in the moves down, and by using a broader range of tools and asset classes, so stocks, bonds, cash, and sometimes even REITs and precious metals and commodities as we see fit. So, really having that flexibility to add value.
Great. Well, I know you're very busy, so I don't want to take too much of your time. I wanted to thank you for that huge. We went overseas. We looked at gold. We talked about rates and even the Fed chair. I would love to have you back. When later on to see what when something actually does happen or not, or if it keeps going up. But I mean, it's hard to believe that we're gonna keep going up and up. But thank you for your time.
Yeah, I'd love to come back on and talk whenever. Thank you so much.
Thank you.